Before we dive into today's lesson, let's quickly revisit some important concepts we've covered. In our previous sessions, we learned about what the stock market is and how it operates. Now, it's time to expand on that foundation by all these topics are for your general understanding. There's no need to dive deep into them, but it's important to grasp the basic concepts. The different stock markets in the US will break down the major stock exchanges and how they work. Understanding stock market indexes. We'll dive into how these indexes represent the overall performance of the market. Factors influencing stock markets. We'll look at key drivers, from economic indicators to global events, and how they impact market movements. One, New York Stock Exchange, NYSE. The New York Stock Exchange, or NYSE, was founded in 1792 and is the largest and oldest stock exchange in the world by market capitalization. It's located on Wall Street in New York City and is well known for being home to many high-profile, established companies. 2. Nasdaq Stock Market, NASDAQ. NASDAQ, founded in 1971, is the second largest U.S. stock exchange. What makes NASDAQ unique is that it's fully electronic, enabling fast and efficient trades. It's particularly well known for housing many of the world's top tech companies. 3. American Stock Exchange, AMEX. Previously known as the American Stock Exchange, it's now called NYSE American after being acquired by the NYSE in 2008. It primarily lists small-cap companies. 4. OTC markets, over-the-counter markets. Unlike the formal exchanges, OTC markets are decentralized, meaning trading happens directly between parties, without a central exchange or broker. This market is commonly used for stocks not listed on the major exchanges. 5. Chicago Board Options Exchange, CBOE. The CBOE is the largest U.S. options exchange, specializing in the trading of options contracts, which gives investors the right to buy or sell stocks at a predetermined price. 6. New York Mercantile Exchange, NYMEX, AMP, Chicago Mercantile Exchange, CME. Both exchanges are part of the CME Group, the world's largest futures exchange, where investors trade contracts based on commodities like oil, gold, and agricultural products. 7. BATS Global Markets, CBOE BZX Exchange. Now part of CBOE Global Markets, BATS is known for its focus on technology and innovation, providing a modern alternative venue for stock trading. Remember, the NYSE and NASDAQ are the two major stock exchanges in the USA, and we'll explore them further in future sessions. Now, let's move on to the concept of stock market indexes. A stock index is a statistical measurement that tracks the performance of a group of stocks. These indexes serve as a benchmark to evaluate the overall performance of a particular market or sector, giving investors valuable insights into market trends and economic health. Price-weighted index. Stocks with higher prices have more influence. Market cap-weighted index. Companies with larger market capitalizations carry more weight. Equal weighted index. Each stock has the same influence, regardless of price or market cap. We'll cover these methods in more detail in an upcoming session. One. S&P 500. The S&P 500 is one of the most widely followed stock indices, tracking 500 of the largest U.S. companies. This index includes a diverse range of sectors, from technology to healthcare, and is often used as a benchmark for the overall U.S. stock market. 2. Dow Jones Industrial Average, DJIA. The Dow Jones tracks 30 large U.S. companies, often referred to as blue-chip stocks. It's one of the oldest and most famous stock indices, serving as a barometer for the U.S. economy. 3. Nasdaq Composite Index. The Nasdaq Composite is heavily concentrated in technology and growth companies, tracking more than 3,000 companies. It's a go-to index for investors interested in innovative and high-growth sectors. 4. Russell 2000. The Russell 2000 index focuses on the small-cap segment of the U.S. stock market, tracking 2,000 smaller companies. This index is often used as a measure of performance for smaller, growth-oriented businesses. 5. Russell 3000. The Russell 3000 tracks 3,000 of the largest U.S. companies, representing about 98% of the investable U.S. stock market. It's a broad index that covers a wide variety of sectors and industries. 6. Wilshire 5000 Total Market Index. The Wilshire 5000 is one of the broadest stock indices in the U.S., aiming to represent the total U.S. stock market by including almost all publicly traded companies. 7. S&P MidCap 400. The S&P MidCap 400 tracks mid-sized companies in the U.S., representing a segment of the market that's not too large, but still established and growing. 8. S&P SmallCap 600. The S&P SmallCap 600 measures the performance of 600 small-cap companies, focusing on businesses with smaller market capitalizations. It's a key index for investors interested in the potential for high growth among small-cap stocks. Each stock index gives investors a unique insight into different segments of the market, from large, well-established companies to emerging, high-growth firms. In today's session, we explored the different stock markets in the U.S., what stock market indexes are and how they are calculated, why these indexes are important for investors. In our next session, we'll continue building on these concepts, so stay tuned. Until then, keep exploring and learning about the exciting world of the stock market. See you next time.